Hello again, fellow BeachBum traders. Welcome to part 1 of our weekly trading game plan for the week of April 11th through April 15th, 2022. The title of which is Don't Fight the Fed. I'm sure that you've probably heard that quote before, and if you wondered where that came from, I'll put a link to this quote in the description box below, but it comes from the late Marty Zweig is credited with that saying, "Don't fight the Fed," in his book Winning on Wall Street from 1970. And I thought this quote was very valuable. It says, "Indeed, the monetary climate, primarily the trend in interest rates and Federal Reserve policy, is the dominant factor in determining the stock market's major direction." So again, the stock market's direction is determined by the Fed's policy in interest rates and general policy. And we'll talk about what we learned this week from the meeting minutes from the last Fed meeting, and then we'll talk about strategies and ways that we can make money by not fighting the Fed at the end of our video in our strategy section. So we hope you'll stick around and listen to our strategies of how we can make money by not fighting the Fed. So let's get started. Okay, let's take a real quick look at how the markets ended up on Friday, April 8th. I'm on the homepage of FinViz. You can find our affiliate link, as always, in the description box below for FinViz. And we can see that although each of the indices was either modestly positive or negative, we can see under the covers the markets are very weak and tend to be bearish. So if we look at the news very quickly, we can see the Treasury hit a 3-year high, dollar posts gain, so we'll see in the futures that the dollar's been running up. We can talk about what that means. And session was mixed, interest rates surge, so ripple through the economy, homes to car loans. So then if we look at oil, we see oil is now below $100, ran up back towards $100 a little bit. Natural gas has been running very high. And then we see the Treasury curves have been inverting and are in the 2.7 range. And we'll see where that is in the futures as well. I almost titled this week's game plan something about the inverted bond yield curves, but I thought that was more esoteric than the Don't Fight the Fed, although they are very closely related, and we'll talk about what that means in a moment. Okay, if we take a real quick at each of the indices, if we look at the daily on the SPY, we can see it failed to break out. We've been talking about we need to see a definitive, convincing breakout to change our sentiment from a bearish downtrending market to a positive bullish market, and we can see now it's showing in FinViz that the SPY is in a downtrending channel. It hit the top of that channel, failed to break out, and now if we go to the weekly version, we can also see it's struggling at the intersection of these moving averages, which is what we've seen for the past couple weeks, and we're going to see the same thing in most of the other indices. So if we look at the Dow, DIA, we see again it's struggling at the intersection of those moving averages, failed to break out, and now looks like it potentially is breaking down. If we look at the Qs for NASDAQ, again we're going to see essentially the same thing. Again, we see it failed at this intersection of the moving averages and then had a more severe downturn. As again, when we'll talk about this more later, it is more sensitive to the increase in the bond yields, and we saw a surge in the bond yields towards the end of the week after the FOMC meeting. If we look at the Russell, the IWM, again, it's going to also be very sensitive to growth, the inverted yield curve. So we see again it went and tested its moving average, failed, and then retraced pretty severely on Friday. So if we quickly look at the VIX, there was some uptick in the VIX when the FOMC meeting minutes came out. We see that little spike there, but it failed. There weren't really any major surprises, and we'll talk about that in a minute. And then we see the VIX, as usual, tended to retrace. So now it's sitting a little. There was a little bit of a surge on Friday, but it's retracing down below 20. And again, now we have some time until the first week of May is the next FOMC meeting, May 4th and 5th, I believe. We'll see it in a second. Oh, May 3rd and 4th. So we have a little time, unless something else happens globally that would cause a surge in the VIX. We would expect it to retrace at least to 20, potentially below 20, and then in an extreme case, maybe down to 16 or so. So we'll be watching that for potential opportunities going into that next FOMC meeting. So if we look at the sector performance in FinViz via the Groups tab, if we select sectors, we can see on Friday the top performing sectors were energy, financials, basic materials, and consumer defensive. For the week, the top performing sectors were healthcare, consumer defensive, and energy and utilities. And for the month, the top performers are healthcare, consumer, defensive, utilities, energy. So we see this reoccurring theme. And again, I would focus more on the weekly and monthly than the days, as they will tend to have more rotation. We can see the worst performers were technology, consumer, cyclical, and technology. And again, we've talked about why we expect that to be the case and to continue along those trends. So if we then go to the industries, we'll see, at the top of the list is commodities, oil, gas, silver, gold. Silver had a good day on Friday. Other precious metals, again, coal, etc. So you see the top of the list is all commodities, few utilities, things like that. Then if we go to, and again, towards the bottom, we see semiconductors seem to have finally rolled over. So our stocks position has been doing well lately. So semiconductors, yeah, down in that area. And then per weekly, again, we're going to see a lot of commodities. We see uranium had a positive for the week. Coal, farm products. We talked about agricultural products. We're going to focus on those again. And then we see some other trends, discount stores, and we could talk about what does that trend mean. Then we see some healthcare related, drug manufacturers, pharmaceutical retailers, and then utilities. So then if we look at countries, this is kind of interesting. So if we select countries, we'll see the top performing country from Friday was South Africa. So I thought that was kind of interesting. So I clicked on South Africa, and essentially you can use this same strategy. We have this video about how to find stocks in hot industries. So I'd recommend that if you're interested in one of those sectors or industries that we just looked at that happens to be hot currently, and you want to see what stocks are in those and how to pick those. I'd highly recommend you watch that video, how to find stocks in hot industries using FinViz, and I'll put that link in the description box below. It essentially is what I'm doing right now. So I jump over there and I see the chart, so I can look at them in a chart view. I can also click on the overview and see them in a tabular view, and then I can see, okay, that says South Africa was a top performing country. Well, why? What's in South Africa? Well, look, it's gold, oil, and natural gas. So that makes a lot of sense, right? South Africa has a lot of gold, natural, and some oil, and therefore when gold performs well, South Africa will perform well. So I thought that was kind of interesting. Please let me know in the comments below, what do you think? Do you find that interesting? What countries are you looking at? We'll talk more in the future about emerging markets and the trend in that direction. Again, more in the future, because it's an emerging, what I'd call a mega trend, a long-term theme that we want to be able to take advantage of. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released. Typically I go to investing.com and I will copy out the results from that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we can discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, let's talk about the major economic data that we got from last week. So not much on Monday. Tuesday, we got EU was talking about also banning the import of Russian coal. That and there are further talks about banning oil, etc., caused oil and natural gas to run up even more. So it ran up pretty much towards the end of the week, and then oil started to decline. We'll see that in the futures. We'll see the PMI data. Actuals were pretty much close to forecast, so there was no surprise in the inflation data on Tuesday, and then Wednesday we got the FOMC meeting minutes, and again we saw this little brief spike in the VIX, but again we see no major surprises, and it was more dovish than feared is the conclusion. So people were afraid that there would be some kind of surprise in these meeting minutes, that it would be more hawkish, they would taper even faster than what was feared, and they said, kind of what we expected, which is they're going to reduce their balance sheet. The rate at which it's a high rate, but it's not a surprisingly high rate. So they said they're going to run off 95 million from their balance sheet monthly, 60 billion in treasuries, and 35 billion in mortgage-backed securities. So you'll hear this called MBS. So there's more focus on the long-term treasuries, letting them run off than on the mortgages. So the impact on the housing market, there will be an impact, but it won't be as severe as if they did more in that area. And then you could hear that there's a pretty much consensus among the FOMC members of a 50 basis point increase in the May meeting, which is pretty much what we expected. There's also, discussion that the subsequent meetings will also see a 50 basis point increase. So interest rates are going to be increasing rapidly. We're going to talk about towards the end of this video, so please stick around. I think there's some important information about what does this mean, what should you do right now because of this increasing interest rate curve to save yourself money both now and going forward in the future. Then on Thursday, we got jobless claims data. We'll look at that. The continuing claims was a little bit worse than forecast, but the initial claims at 166K was better than forecast, and it was something like the best since the 1960s or something in terms of initial jobless claims. So what does that mean? It means fewer people are losing their jobs right now, but there are still more people unemployed than what they expect. So the job market's still tight, but there's still a deficit in workers versus available jobs. And in the coming weeks, I'll talk about my opinions as to what I see happening in those regards. Talks of recession, etc., the inverted yield curve, what that means, etc. But then also a note was that I saw the consumer credit was much higher than forecast. And again, we'll talk more about, okay, what does that mean that the consumer credit is running high, and what does that bode for the future, particularly in a rising interest rate environment. So again, we'll probably talk about that more in the future, but I think that's important to note. So then next week, the important data, Tuesday we get CPI, so consumer inflation data, and then Wednesday we get producer inflation data. So again, we expect inflation to continue to be hot. These are backward-looking data points, so this will be for the previous month. And again, we don't expect to see a major downturn in inflation right away, possibly, going forward into the future. So, and then important to note that Friday is a holiday, and just as a reference, we now have a Google Calendar. There's a BeachBum Google Calendar that you can find the link to in this in the description box. And as part of that calendar, we've also built a calendar for options expiration dates. You can view that all from this BeachBum Trading Google Calendar. These links will be in the description box below. Again, if you go to that BeachBum Trading Google Calendar, you can see the options expiration dates highlighted and also the market holidays. So again, it's important to note Friday is a market holiday. The markets are closed. So that means that options expiration is going to be on Thursday rather than Friday. Normally it's on the third Friday of every month. This month it's on Thursday because the markets are closed on Friday. So again, check out that calendar, and we also show our premiere schedule there. So you can add those to your calendar and join us in the live chats for our premieres. So also on Thursday we get jobless claims data, retail sales data, and Michigan sentiment data, or consumer sentiment data in general. So Thursday will be an important view on the economy. This will tell us a lot about how is the economy doing, are we headed for a recession, and if so, in what time frame. So again, keep an ear out for this data. Again, I will try to post that in the Surf the Markets report channel in our Discord, which hopefully will help you be alerted to that data as soon as possible. So, okay, if we take a quick look at the market screen in Webull, again, I'm on the market screen in the online browser version of Webull, and you can also see that promotional deal right now with Webull. You can get 5 free stocks when you open and fund an account, and you can get 3 free stocks, each valued up to $3,000 if you open a Webull account now. You can find the affiliate link for Webull in the description box below. So again, that's normally they offer 2 or more free stocks. Right now they're offering 5 or more, and each of those final 3 up to $3,000 worth. So that's a nice deal at the time of this recording. So we could see in the distribution of advancers as decliners, we have more decliners than advancers. Again, there's small distribution trailing off. Net inflows, again, as we've seen the past several weeks, the NASDAQ is the outflow money of the NASDAQ is more severe than the NYSE. So the NASDAQ's been declining now for some time. There's a lot of weakness in it. We see these little pops, which is expected in a bear market. We'll see these bullish retracements can be pretty violent, but then the downtrend continues. So if we look at the best performing industries, it'll be pretty much what we saw in FinViz in the group sectors. We see a lot of commodities, oil and gas, coal, etc. Healthcare is showing mixed here. We've got investments. Again, commodities, metals, mining. And then we'll probably see, things that are consumer defensive oriented as well. So if we look at ETFs, look at the indices, the direction of the indices, we see Dow up, S&P down, VIX short, so down, Russell down, and NASDAQ down. And one thing I wanted to point out is we recently released a video on how to pick an ETF to choose to long or short the S&P. So I'll put a link to this video in the description box below. It talks about, you know, which one we did an evaluation and compared SPXS to SPXU to short the S&P 500, and a comparison of SPXL versus UPRO for longing the S&P. So you can see the performance of each of those, the current performance in this tab. And then you can choose, so you can see in our video which one you may want to use. If you want to bet long or short on the S&P, you can see which one we prefer in those directions. So if we go back and look at some of the other ETFs, industries, again we'll see utilities, energy, we see a little healthcare green, materials, basic materials, again the same thing we saw in the sectors, consumer defensive, positive, energy, a little real estate, and financials. And then commodities we know is strong, precious metals, aluminum, livestock, although we'll see in the futures there's a little bit of a rollover in some of the livestock area. Again, precious metals, and then coffee, softs, etc. And then bonds, we see inflation as a major theme, not surprising again. And we'll see short end of the curve because it's inverted. So I hope that helps. And now let's talk about our strategies for how are we going to play all of this data. And again, some important notes I want to share with all of our traders, both from my personal standpoint as well as a business standpoint of how do you deal with this rising interest rates, hot inflation, quantitative tightening type of environment. Okay, if we take a quick look at the futures, I'm on the futures tab of FinViz. We can see the indices decline. We had a little bit of a retracement, but again, they failed to break out. We're still in a downtrend, still have a bearish sentiment on the market, and we're playing that accordingly. We see the Russell decline more severely. We see the NASDAQ decline a little bit more severely. We see the VIX had that brief pop and then it's retracing. So we're looking for a bottom at least somewhere in that range, if not lower. We see oil, you know, it perked up a little bit and then is declined now below 100. All the oils, the gas, etc., all the oils. And then we see this continued run up in natural gas. You know, if we back off, we can see the most recent peak is around 750. We're waiting to see if it peaks out at that 750 or where the peak is, and we'll probably, if that happens, we'll probably double down and short natural gas with cold. KOLD, we do have a position at a higher cost basis, and that will help us lower our cost basis. So again, we're waiting for that peak in natural gas rollover. We'll probably double down and short it with cold. If you're playing this run up until it peaks, you can use BOIL, B-O-I-L, or there's another UNG is an ETF on the actual price of natural gas. So if you want to play this momentum until it peaks and rolls over, you can use those. If when it peaks and eventually will come down, you can use KOLD. Gold started to perk up a little bit. It had been consolidating, been pretty flat, and we had a little perk up. We may well see that run up back towards 2100 soon. Same way with silver. Actually, silver was outperforming gold towards the end of the week, and hopefully again we'll see a run up in these areas. If you have any questions about how to play silver, gold, any of these commodities, our weekly trading game plan from last week focused on trading commodities. We have other videos as well. I'll put the link to last week's trading game plan in the description box, and I'd highly recommend you see that in terms of how to trade commodities, etc. So we also see this palladium and platinum perked up a little bit, copper perked up a little bit, and then we see the livestock finally rolled over declining. Unfortunately, I don't have a way to short an ETF to short livestock. If you want a long livestock, there's one called cow. Similarly with corn, oats, there's ways to ETFs to long these. I don't have a way to short them, so if you want to short some of these that are extended like oats, you can look for individual stocks and short the individual stocks. Again, we can't do that in retirement accounts. I don't know of an ETF to be able to do that right now. I'd love to find one in orange juice. I did a search for orange juice and found out that there's no ETF that specifically invests in orange juice either way, and that they're coming out with one in the near future. I think it's called something like breakfast or something. It's related to breakfast. So I will put these links about agricultural products and ETFs, the 5 agricultural products, in the description box. And also here's a link more about trading commodities. So I hope those will all help as well. Again, you'll see we're focusing on these areas because we can see these opportunities. We're getting these extended run-ups and then declines in a lot of these commodities. So I think this is a great place for opportunities. We see lumber finally decline, then had a little bit of a retracement. Coffee was running up. We see here's another extended opportunity if we could short sugar, but we don't have an ETF to do it. But that looks like an opportunity. And then we saw the steep decline in the prices of bonds, which we've been expecting for a long time due to the Fed's policy. And again, don't fight the Fed. You know, the Fed's going to be letting bonds roll off. They're going to be selling bonds. That's going to drive the prices down, the yields up. I guess we probably should have been shorting the prices for some time. I'm not really going to jump on that right now because going into the May meeting, we expect that to balance out, to bottom out eventually, or at least stabilize. So you can see that's the trend. Don't fight the Fed. Don't fight the tape. Don't fight the trend. The trend on bonds is down. Down price, up yield. So there's opportunities to play that, and we can talk about that in more detail if you're interested as well. So please let us know, what areas would you like us to focus on more. And again, the Forex area, there's this nice opportunity correlation between the U.S. dollar and the Japanese yen. U.S. dollar up, Japanese yen down. Unfortunately, we have yet to find a platform that we can trade Forex, particularly in our retirement account. So if you're trading Forex, again, I think that looks like a juicy opportunity. So I hope that also helps. Okay, another one of our ongoing strategies right now, as we're still in a bearish market, as we saw in the indices, etc., and in the sentiment, is again, this is not financial advice, this is my opinion. So in my humble opinion, I would stay away from unprofitable companies, particularly unprofitable tech companies, software companies, etc., that are losing tons of money. In my opinion, they're going to be hit the hardest in this declining market. So those with real value, real valuable patents, intellectual capital, etc., are, in my opinion, they're either going to be acquired by big boys flush with cash, and those not courted for acquisition, essentially it's telling you they have no real value. So if the big boys, Google, Facebook, Amazon, etc., or other big boys in whatever industry that have tons of cash, if they're not looking to acquire one of these unprofitable companies, essentially, in my opinion, that's telling you they have no real value. They don't have a customer list that somebody wants. They don't have intellectual capital that somebody wants. And they're either going to, again, in my opinion, they're going to either pivot or die in this increasing interest rate environment, possibly heading into a recession. Capital is going to be more costly, harder to get, and again, if they're losing capital when they run out, what are they going to do? So again, I would stay away from unprofitable companies. We have several videos on how to find cheap profitable companies in FinViz. So I'll leave these links to these previous videos in the description box below. So here's how you find cheap profitable companies. Here's cheap value companies, and obviously you can combine those techniques and find cheap profitable value stocks. So we hope that all helps. So the other important topic I wanted to discuss that I alluded to earlier in this video is to get your cash now, and I'll talk about the reasons briefly, but I also want to let you know is we have this video on our other virtual consulting YouTube channel in post-production. It'll probably be premiered on Sunday. We'll leave a link to this video in the description box below, which goes into more detail about why am I saying that. Why should you get your cash now? Again, I'll put a link to that video that will be released, and also to our virtual consulting channel, which we hope you will choose to also subscribe to, and you can view all the videos on topics of virtual consulting, side gigs, generating additional income that you can then put into your portfolios and invest with, as we do. This is how we operate. So just very briefly, why am I saying get your cash now? Well, we know from the FOMC meeting minutes, and what we've been expecting is that interest rates are going to be rising, and rising quickly, and that means that variable loans, any kind of variable interest rate, is going to go up and become more costly. We also know that the bond yield curves have been inverting, will probably continue to invert, may invert more severely, and that means banks are less likely, or anyone is less likely to loan money when they can make a higher yield in a short-term bond. So again, you'll hear more of my commentary in that presentation on the virtual consulting firm. But what does that mean? That means you want to get your cash out now at the lowest possible interest rate, because doing so in the future will be more costly, and if it's a variable rate, it's going to increase as time goes on. So I'm highly recommending you get all the cash that you can at the best interest rate right now. Lock in a long-term fixed rate, get out of any variable rates, and then you can use that debt to pay off anything that is exposed or vulnerable to increasing interest rates. Also, we know inflation has been hot, continues to be hot, we'll expect it to be continuing to be hot, and therefore if you're going to buy something, again, this is a business channel, so a lot of those expenses are tax deductible, so if you're going to buy something anyway, you might as well buy it now. And if you can get a 0% buy now, pay later type of rate for a year or whatever, well, buy it now with your cash that you just got out and deduct it from your taxes, and then when the interest rate's going to be due, then you can just pay it off. And then any excess cash, again, you'll see I'm recommending to these business people that they take the rest of their cash and invest it, and that they come back to our BeachBum trading channel to learn how to invest their money. So hopefully you can see how these things work together to make money and then invest your money. So again, we hope that we'll also see you on our virtual consulting channel. If you have any questions, we also now have a channel in our Discord called Side Gigs, that is called Side Hustles, which is related also to opportunities in virtual consulting. So if you have any questions in those regards, you can post them in the Side Hustles channel in our BeachBum Trading Community Discord. So we hope this all helps. Let us know what you think of all of this. You know, what else would you like to see? What else would you like to hear about? Again, the key takeaway is don't fight the Fed, and the Fed's policies are going to dictate the direction of the market, and we know which direction the Fed's going, which is increasing interest rates, increasing quantitative tightening. So again, let us know in the comments below, in our Discord, in our Facebook group, what you think of all this, and let's talk about it. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You could also find a link in the social media category on our web page, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.